our sixth episode of our Operator series. So we've got a great group of guests today. We have, I guess first, before we jump into this, I'm coming to you all here from Orange County, California, which is just south of LA. If you guys want to throw in, I don't know which side the chat's on, but throw in where you're dialing in from, please drop us a line. I know a lot of you, I looked at the registrants for this week, a lot of people coming in for their second, third, fifth, even sixth time on here. So it's great to see you all on here. I'll run through our guests here, and if you guys want to raise your hands, and we can jump from there. We've got Stefan, who's the CEO and founder of Jetson, which is the world's only seasonal probiotic. They also very kindly donated their immunity probiotics to our entire Chicago fulfillment center team. So thanks again there. That meant a lot to the team and to ShipBob. We have Jon Corwin over here, Director of Growth at Readers, who's one of the largest online eyewear retailers. They launched in 2012, and so they've been around for almost a decade. He also works with a handful of other e-commerce brands, so he's been able to see a lot over the last couple months and years. And then we have Sam over here, the CEO and co-founder of BlackWolf, a men's grooming and skincare brand. What I found very interesting from them is they were able to quickly pivot into selling moisturizing hand sanitizers, which there's a massive influx in demand there, so I am sure we'll get into that. So real quick, I'll look into the chat. We have, let's see, Chicago, Salt Lake City, Nick trying to show off
the Cape.
His Cape Cod mention. Awesome. We have Mexico, London, Morocco.
Oh, that's awesome.
Another person from Orange County, Toronto. Wow, all over. We're covering a lot of spots. I'm excited. So as always, there we go, British Columbia, Austin. So drop in your questions in the chat, drop in your questions in the question section. And to get started, Stefan, I want to start with you.
Sure.
With probiotics and selling a range of different probiotics, how have things changed for you all in the demand of the products you've seen? You know, are some of your best sellers now getting kind of relegated towards the back, and there are certain products that are selling better than others? Just talk us through that a little bit.
Yeah, well, we're a bit unique that we only traditionally sell one product a season. So our whole pitch is we're the world's first and only seasonal probiotic. So we redo the products every quarter, which is, by the way, a really terrible idea from an operational standpoint, but it's a great business idea. But basically, we create the product every quarter to correspond to what the body needs and what the environment, what the science is saying that makes sense for your body. So we were entering into COVID with our spring formulation. The idea is you get outside, you have allergies. We have a gut product which actually tamps down allergies. Who's going outside right now? So as you can imagine, entering it literally March 16th, we made the switch to our spring season. And of course, that's the day the whole country shut down and said, no one leave your house. So there's a couple of days of, well, that probably wasn't the best idea. Luckily, we had, I kind of saw this coming. I was overseas in Jan and began to see some of the ripple effects from Wuhan, and saw that we probably would probably need some more of our immunity or winter product that we had just finished up in March. So I put in an order for that as well. So we had a bunch of that, which is great. So we were able to kind of quickly pivot to say, hey, outside's awesome, sign up.
Manufacturer over in China?
I was overseas in an area that I was looking. It's a long story. I was over in Eastern Europe, and we had some people from China there, and so I realized quickly this was going to go south pretty quickly, and so I built some more product. Our product's made in Atlanta, but anyway, so we have immunity. So we shifted to that pretty quickly. And the first day, I think we announced we had more immunity. We sold $20,000 or something like that worth of immunity products. So yeah, definitely was a quick pivot for us to shift away from purely selling a subscription, which is still the best one out there, but also selling this one-time product that was focused on immunity.
Very interesting. Yeah, I know. I lived in Austin for a little bit, and I know it's allergy season picking up over there. We've got Paul over here from Austin, and so yeah, it's got to be just very interesting for your guys' business, where it's a shock to where there's usually a huge surge in demand, and now just having to be very nimble, which has been, how a lot of us have had to operate.
Yeah.
Jon, let's go to you real quick. So with reading glasses in particular, how does demand change for that through a pandemic? I know people are spending more time reading, more time on their computers. A colleague of ours was sharing in Slack that she read like 3 books this weekend. So I was pretty jealous of that. Talk us through that and how that's impacted readers.
Yeah, it's been a really interesting time for us. So, and as you guys may know, the readers segment's a small slice of eyewear overall. But if in looking at the reading glasses slice, the vast majority of that activity is happening offline, right? The drugstores, brick and mortar. So online adoption is there, but it's not the muscle memory default choice typically in that path to purchase. So, with that demo is primarily, as you guys can imagine, it's 45 plus, right? More of the boomer demo, which again, some of this is getting them accustomed to starting that discovery, starting that search online. So a lot of areas in which we've been able to serve well for the brand in early days was offering just this deeper, both in terms of breadth and depth of our catalog to make our solutions more attractive than the narrow end cap selections they may get at brick and mortar. But one really interesting shift we've seen, this has panned out really in the last 2-3 weeks, but so we sell quite literally every flavor of reading glasses you can imagine, from reading sunglasses to computer readers to bifocals, multifocals, so on and so forth. I won't go too deep there, but sun readers, as you can imagine, which is a huge seller for us. This is right when seasonality usually picks up. That's basically fallen off a cliff. So interestingly, though, computer readers have always been a strong seller for us, and it's a niche that you usually can't find in brick and mortar. What we found is super interesting, though, is because of more of the work from home dynamic and the stay-at-home orders, as you mentioned, Casey, there's been an uptick in that time spent on devices. So there's been this crazy adoption cycle around blue light activity right now. So blue light glasses, I'm sure you guys may be familiar with some of the direct-to-consumer brands in that space. But so our computer readers were essentially our vernacular pre-blue light era of what that was. So we've quickly been pivoting to try to reposition that section of our catalog, because it's grown something like 250% year over year for us relative to what we were doing last year. So exciting time in that I think we're going to see an accelerated adoption for folks buying readers online, knowing that option exists. But not only that, things like blue light, we're going to see a much more accelerated adoption cycle for some of those maybe lesser known or niche use cases for reading glasses.
Interesting. But by the way, I like how you called out the boomers needing the glasses. I'm the only one up here with glasses.
Well, just to be really clear, 45 isn't a boomer, buddy. All right.
Correct.
And
clear distinction. Yes, I apologize.
The guy approaching that, I'm not a boomer.
Yes. Question on that, John. With that huge influx in the computer readers, especially the blue light, has that been able to offset the loss or the drop or the delta you saw on the sun readers?
That's a great question. So in aggregate, broadly speaking, yes, but not in that, for every one loss on the sun side, we're seeing an uptick in the blue light or computers side. But I think more as a product of just folks are not, they don't have that brick and mortar path available to them like they would have. So just overall organic activity and search queries around the category have gone up. We're seeing it in the marketplace presences as well, Amazon's, Walmart.com, Overstock, those areas as well. So yes, we've benefited from that COVID dynamic, if you want to call it that. I wouldn't say though, the percent of sales that sun were for us relative to where blue light is now, even with the 250% year over year growth, it's still not at that sun level of sales.
Interesting. Well, I know in Orange County, this is not a good thing, but people were flooding to the beach way too fast.
Yeah.
When they opened things up. I was not part of that. So I don't know.
That's crazy.
More than sunglasses. And great question from Tim. We'll get you in one sec. And Martha, yes, there's nothing wrong with boomers. Thanks for clarifying that. So
no, not.
Let's jump over to you. With, talk us through how you were able to pivot so quickly into the hand sanitizer space, the moisturizing aspect, and what was the catalyst that drew you to that?
Okay, great question. Well, our COVID experience sort of started in January. I don't know if you guys remember when WHO said that there was no human-to-human transmission in China, and China was saying the same thing, and so people weren't taking it quite as seriously. My brother, who's my co-founder and COO, did not believe any of that. And he went and ordered 3 times the volume of bottles from China, because we do manufacture in the US, but we get our containers from China because you can't get that in the States. And so when he did that, I was a bit stressed about it. We were bootstrapped from the beginning, but it ended up being an amazing call because we were flush with containers, bottles, and we could manage the growth. I know that with hand sanitizer, the biggest issue of getting supply is actually the bottles, not even necessarily the hand sanitizer, especially now. But in terms of the hand sanitizer pivot, our manufacturer actually approached us with the idea and said, hey guys, you guys are our most nimble and largest customer of all the people on our list. Do you guys want to make a hand sanitizer? To which our head of marketing said, yes, we have to do this. So we put in an order. We said, how much do you have? They said, we have 3,000 units we can make you. We said, okay, we'll take it all. It was really expensive to get. It was really hard to come by. We made it in 2 packs, and then we charged the customers roughly what it cost us to manufacture it, ship it, store it, fulfill it. So there was almost no markup, basically, which is more expensive than we thought. And then when we launched it on the site, we sold out in about an hour. We didn't expect.
Where were you getting demand from? Was that from your email list or your customer list or online? How were you driving all that?
Just our email list.
Wow.
Yeah. In fact, most of our customers on our email list didn't get a chance. We had a lot of people write in saying, I thought you said you have hand sanitizer. I went onto your website. It's not there. That was something to manage. So we actually launched a pre-launch for another run of hand sanitizers. And we sold the same equivalent in about 2 hours.
Jeez.
I think we're sold out for all the hand sanitizer we can get our hands on now. So it's absolutely crazy. And I think it's just down to the fact that you can't find hand sanitizer. And if you can find it anywhere, it's just incredibly marked up, obviously.
Yeah.
So
how have you been able, since it's sold out so quickly, have you continued just to keep reordering from your manufacturer? Are they completely slammed and they can't replenish you fast enough? What's going on there?
Well, the thing about so the majority of our manufacturers' clients are actually, majority of sales are in physical brick and mortar. So they're actually, a lot of their customers are in serious trouble. So they're not making any orders. A lot of the e-commerce brands they work with are much smaller, as were we a year and a half ago when we started with them. But the issue is that most of their customers aren't ordering massive volumes of hand sanitizer like we were. I mean, they're still slammed. But again, the issue wasn't getting the hand sanitizer bulk. It was getting the bottles. And so we've been waiting basically to get fresh bottles in to fill. But it's been a huge challenge.
So question on this too, so especially since they brought the idea to you, which is rather unique.
Yeah.
And you guys are self-funded.
Mm-hmm.
And there's obviously a lot of change happening right now.
Mm-hmm.
From and you don't need to divulge anything here if you don't want, but from a payments perspective, were you able to negotiate better net terms, or since you guys did pre-orders, you were able to get all the money up front, and so that wasn't as much of an impact to the cash flow? What was going through your guys' head there?
So great question. Our manufacturer in Florida, they're really great to work with. We approached them when, a year and a half ago when we first launched. We ordered 2,000 units below Mlqs. They've treated us really well from day one. They've always given us incredible payment terms. I won't say what they are because their other customers are going to go ask for it. They do a lot of favors for us, and they've helped us significantly. We started off as their smallest client. We're now, I believe, we're their 25th largest client out of 6,000, I think.
Oh, wow.
And so we've experienced massive growth just overall, pre-COVID, during COVID. And so we didn't need to change anything when we started placing these larger orders or rushed orders because the terms were already in place. They've always treated us well. And so they're incredible partners. It was great for them because we took everything they have. So I always say it was a great sales pitch on their part.
Mm-hmm. I love that. And that's been a very common theme through all the episodes, is just the value of partnerships and long-term relationships and just treating people well no matter what, because it's during times like this where those true partnerships really come to shine. And again, you have your manufacturer coming up with business ideas for you all.
Yeah, right.
So, here we'll jump to Tim's question right after this. Question here from Dean or Dan. Sam, how do you manage to negotiate lower Moqs? It's something that that Dan and their business partner are going through right now.
Okay, great question. Really boring answer. my brother and I walked in. My brother was 20 years old. I was 22. We said, we have this really big vision for a men's skincare company that was going to change the space completely. Can you be nice to us? And they said, okay, we'll be nice to you. And we said, can we have like net 30, all kinds of things better than that? And they're like, yeah, 100%, it's cool. We'll give you terms. It's not a big order or anything. We placed the order, sold out. We placed another order, progressively bigger. We're now ordering, 50,000 units at a time from them for each SKU every couple months. And so as we've been growing really quickly, they're more than happy to help us as we're growing. But the one thing you mentioned before is that we have bootstrapped. We have bootstrapped to this point. We literally just yesterday closed an angel round of funding. It's meant to be our only round. It's our first and it's our only round. Obviously, we're not into doing 17 different rounds with VC, but it was definitely an angel round. It was about $1.5 million. It's going to be a huge step for us. But knowing this, our manufacturer has gone to extra lengths to help us while we've been in a cash crunch leading up to the close.
That's awesome. Very cool.
I can jump in. We did the same with Jetson. We had the same exact conversation with our supplier when we first started. And to answer your question, how do we negotiate lower Mlqs? Frankly, it was about selling the vision for the company and getting them excited about, wow, I see potential. I see this is a differentiated product. It's first in its world. It's your marketing is creative. Like, we believe in you as a partner versus just a supplier relationship. So if you're not able to have that conversation with the supplier, it may not be the right supplier. If you're starting out, at this early stage, you need to find somebody who's kind of there with you to grow and wants to grow with you and believes in the product, because shit's going to happen beyond just Mlqs. Yeah. Stuff's going to go wrong. So having that partner there who's got your back and wants to grow with you, that was the biggest thing for us.
I love it. Sell the vision, and of course that's how you closed your round as well, and also ask, because worst case they say no, and it was a no anyways. So it's just Tim's question. So there's a lot in here. I'll open it up to the group, whoever wants to jump in. So from Tim, I'd like to learn more about fulfilling to customers domestically. So U.S. fulfillment center to U.S. customers versus overseas China fulfillment center to U.S. For e-commerce brands, especially tariff implications with importing in bulk from overseas supplier for domestic fulfillment center. Hope that makes sense. Pros and cons, lessons learned. So I guess to summarize that, have any of you done more of like the drop shipping or manufacturing in China model to the U.S.? And if so, how is that transition now that you're fulfilling from the U.S.?
I can talk about, not with Jetson, but my previous lives, I ran about half the company called Radial, which is the second largest e-commerce fulfillment company in the nation. So we had a lot of customers who would do this. Domestically, really simple, right? U.S. fulfillment center, it's really, really simple. You send cases. They, as you know, ShipBob, it's really simple, right? You send them your inventory, they stock it, and they're able to fulfill it for you pretty easily. The biggest challenge, of course, with bringing in from China, as you've already mentioned, which I think you already know the answer to this, it's, of course, time on the boat, unless you're doing air freight, which is pretty expensive. And of course, once it hits the dock, depending on what's happening at the dock, it can take anywhere from 3 days to 3 weeks to get customs clearance, depending on the type of product you're importing. So that's a big thing. It's not all products aren't created equal when it comes to importation. So depending on the class of product, the type of product, it can range a lot, frankly, to get that cleared. Tariff implications, because of the administration's kind of current stance on China and the trade deals we have there. Yeah, nothing you can do about it, frankly, because it's variable. It can change any day. But
that's a great point though in itself, because sometimes maybe it's cheaper, and even though it takes a lot longer to ship directly from China, but it's just a risk reward conversation, because there could the massive risk of not getting it over here. You might not be able to ship at all, and so that's absolutely the conversation we'd have a lot with our customers at Radial, which was you know, some products you can't make in the U.S. Like some products, just the labor is in here, the tooling is in here, the supplies in here. So some products you're not going to make here. But there is a real calculus to say, do I nearshore it, say out of Mexico, for example, or Latin America, or do I onshore here in the U.S.? And yeah, you're going to have compressed margins for sure. But boy, oh boy, if you have a killer product, you know, like Sam's got, and you were relying on a 6-week lead time from China to get your product, and you can't fill customer orders, they're going to go somewhere else. And so there's a really interesting calculus you have to make there. It all depends on kind of your product line and your category. That's my opinion, at least. Mm-hmm. So here's a question from Joshua. how do you handle, we've come across this question a lot. How do you handle delays in shipping with customers?
I can speak to that because I've actually been doing our customer service from day one, which I just started handing off. It's not fun, but it helps drive a lot of insights for the business.
Yeah.
So we had a situation like this. We actually had a delayed shipment from China. It was on the boat. We had them ship another order, air shipment, just to get it, so we could send them to our customers. It may have been stupid in hindsight, but I actually sent an email to every single one of our customers who was delayed. It was about 5,000 people from my personal email. And they said, and a lot responded. And so I was sitting for days on my phone, just writing people back. Incredibly supportive customers. 2 people asked for their money back. Everyone else said, I'm cool to wait. It was so nice that you reached out. In my experience, if you're upfront with the customer and you do whatever it takes to make it right, they'll love you for it and they'll continue to stay with you. But if you're quiet and you don't tell them what's going on and you just ghost them, that's when people get pissed off.
Completely agree. We've seen that a lot across the board, where we've tried to do that ourselves as well. Just being proactive and upfront, and for the most part, people are understanding. We've had those conversations where people get mad, even though there's a lot going on right now. And again, you'll always get those 1 or 2. But again, being proactive, and I love that.
I said, I'm sorry, Casey. No, I'm kidding. Where
it's like, you're the founder, and that's the best way to learn about your customers, is responding directly, seeing the words that they use to describe, what it is that they're looking for from you. So here's another question from Joshua in the questions. John, you'd probably be a great one to jump in on this, especially with how you guys are shifting some of your marketing around the computer glasses. So from Josh, how do you engage with customers relating to coronavirus and generate more brand loyalty without being perceived as trying to benefit off the crisis?
Yeah, that is an outstanding question. And I think, as with all, crisis situations or things of this nature, always walk that fine line of not wanting to be perceived as trying to commercialize or, gain some direct benefit from that situation. So for us, and it kind of ties back to the last question, have taken the exact same stance of kind of what Sam's outlined, and of course adding site-wide header with notifications on fulfillment times being stretched, because for us typically we would have fulfilled those orders same day if it was placed before 2 p.m. Eastern. And now that's extending a couple days. So in addition to that, though, how do we navigate the information offloading, not only from site-wide headers? We're adding those notifications into our order confirmation emails to help reinforce that. It's part of our live chat as well. So any of the kind of those high touch, any of the like kind of high touch customer touch points throughout the funnel that we believe would be helpful, we've taken the stance that we really can't be too heavy handed about it, and helping set better expectations up front. We have the mindset that will lead to healthy customer lifetime value if we're doing that part, particularly if it's a first purchase and they're in need of these products. So we have, I think, second to that, though, taking a little bit of a different spin and trying to lean into, I don't know if you want to call it a brand campaign, but finding a way to message and deliver information around the COVID circumstances and how we're reacting to it through more of, beyond just a PSA itself, but are there ways that we can add more of a positive spin and focus this more on like engagement with our customers of like, how are you spending your time at home? Here are different activities that we have found to be helpful here. Writing certain blog posts on ways to get out there and maintain your sanity amid the constraints. We've posted social brain teasers to, again, we're trying to find ways to continue to engage with our followers in a way that like it is not commercial in intent. And while there may be some of that activity that's happening in parallel, much of that communication stream is truly dedicated towards, first kind of the PSA of how we're currently viewing our fulfillment SLAs and ways that they can reach out to us through any myriad of contact channels. But really it's focusing now on engagement and finding ways to say, hey, we realize this is a tough situation for the world right now. Here's some things that we think may be helpful. Ways to just kind of keep that conversation interesting, but still helpful. So to be clear, though, we have not woven those two together in any way, because we've taken a firm stance there that we don't want that to be perceived as some way to capitalize on it. We did have a dedicated COVID email blast going out from our founders to help kind of initially acknowledge what was happening. I'm sure you guys had a number of those flooding your inboxes. It wasn't promotional in its intent at all. I will say, surprisingly, it was a very successful email send through a commercialized lens, but it was more just, I think, customers voting with their dollars, if you will, and that vote of confidence.
Yeah. I'd love to ask the group too on this topic, because I know I struggle a lot with this. Our product, we happen to have this immunity product, which actually is clinically validated to help, not with COVID, but to help you not get sick. And we had great studies behind it. And I was like, it's a good product. Do we push it though? Does it look like we're being opportunistic? And we struggle a lot with this. And finally, I just said, here's what we're going to do. We're just going to say for the next couple of weeks, anybody who's a frontline worker who writes us, we're just going to send them free stuff. So we sent out hundreds and hundreds and hundreds of bottles of free probiotics, which was the right thing to do. But then I realized we're going to run out of money. So I said at that point, turn it into the kind of buy one, give one, right? And so we then said, anybody who buys anything from the site, even a small prebiotic or something else, anybody that has anything, you get a code that you can give to a frontline worker, whether it's your barista, your Trader Joe's worker, your doctor, my sister's a surgeon working in this space. Basically, we're just going to we'll take our profits from anything you buy, which is what it comes down to, frankly, and we're just going to then deploy that to give out free stuff as long as we can. It wasn't designed to be commercial, and I would say, I'm sure I lost money in the end, but guys, right now it's kind of the right thing to do. So hopefully karma pays off in the end, right? That's kind of my theory on this one.
I love that. And you're providing something that people need, because this is a question that we've come across a lot is, how do you market or sell during this time? But if you're providing this, from reading glasses to hand sanitizers to food goods, that is something that people do need at this time. And another thing that I love to see is just the entertainment that's come out from a lot of the content as well, or people opening up so much more for free and providing so much interesting content in various mediums as well, because that is something that we need as well. It doesn't always need to be so down. We can still laugh and have fun and everything through this as well. And I love this on the chat. Here's something from Mark. Oh yeah, John, you called him out. So Mark's over at Backblade. He was actually spoke on the last episode, another e-commerce brand that's doing some very interesting things. Talk about entertainment. You guys should check out some of their commercials, but very cool brand. So I love it. Check out Teachers, because they do need blue light glasses as well.
Yes. Love the idea, Mark. One other call out, in addition to increased traction with blue light glasses, one of our brands does have a line in the PPE, personal protective equipment space. And so with those molds that we've had, we've been actively ramping up production as fast as humanly possible to try to get some of those solutions out into the market, not only just direct to customers, but medical professionals in areas that need those. Candidly, it was a niche that was, for us, not a main focus, and all of a sudden it became a very big focus. So interesting to see. We are, I think we're candidly playing catch up there, but the shift in the demand across our catalog has been surprising.
Nice. So here's a question. We got people leading up to the series, and the questions here. So from Zach, and then I'll read them off from the others as well. So from Zach, are people shifting to U.S. manufacturers? How delayed are supply chains upstream in countries such as China? And then related from Munaf, domestic manufacturing, where to start? And from Sandra, U.S. product providers that would replace China products. And so, Stefan, I know you have a lot of experience with this at prior roles as well. And then Sam, you guys went from zero to identifying a manufacturer down in Florida. So maybe if you guys want to jump in and just maybe even at least just share how you started to identify even where to manufacture and how to pick one within the United States.
Cool.
Go ahead, Sam.
Okay, I'll go ahead. So at the beginning, our goal was to manufacture as much as humanly possible in the United States. Number one, because it's great to have your supply chain close by so that there are less global cataclysmic events that can get in the way of your supply chain. but two, it's just our brand to be made in the USA. And the one thing we couldn't make here was plastic bottles. You just can't find a manufacturer here for that. No, as you said, there's no tooling. The labor's too expensive. It just doesn't work. And we're even looking now in Mexico at alternate solutions, but we had to make that out in China. The really interesting thing is that our bottle manufacturer in China came back online really quickly, like to 85% capacity. And our rep there basically said, yeah, they told us we have to come back to work. Not safe yet, but we're back. And they were back probably mid-February. And so that's when they started sending stuff. There were delays because
shipping.
They were holding them out in the harbors. There was delays, but they were starting to produce for us almost right away after the lockdown. So it wasn't as big of a disruption as you might think. But ideally, honestly, if we could, we would make everything in the United States.
What about getting did you guys, I'm assuming it came over on a boat. What about the time delay from getting it from the port to you guys or to your fulfillment center?
We didn't see any time delay. We manufacture, fulfill everything in Florida. Great thing about Florida was that, I mean, at least from a business perspective, I don't know from a health perspective, is it was open completely. I mean, we didn't experience any slowdown over there.
Interesting.
And so there were no delays at the port for us, at least. Our warehouse was kept open. Our manufacturer was kept open. And our warehouse, actually, all the employees at our warehouse, two of them lived together, and the other two lived together in a separate house. So it was relatively safe. So we kept operations going. But yeah, we didn't experience any delays. We haven't really experienced any delays at any point in this during this crisis, except for having to reorder the bottles for the hand sanitizer after it's sold out.
Okay. And what about you, Stefan? How have you gone about that?
It's a great question. For our product, for Jetson in particular, we have a bunch of brands, but the one I work on a lot is Jetson. And that one, it's a health product, right? It's designed to be something you consume every single day. So for us, getting a U.S. manufacturer, not that you can't make great products outside the U.S., but we wanted to make sure we had all the right certifications and all the right ISO codes and everything just to be totally above board. So we really spent a lot of time. It was months and months and months after we identified what we wanted to make. Then we figured out who could make it. And then we did a lot of diligence frankly with those folks. I flew out to see the CEOs of the companies, sat down with them, really talked with them and understood their Six Sigma processes and everything else. So it just was a lot of shoe leather, frankly, and calling around to references and other people to get a good, trustworthy manufacturer. So we manufacture all of our stuff in the US. Same thing with bottles. I really wanted to use glass bottles for our product because I like the recyclability of glass and reusability of glass. But to find a 100 milliliter glass bottle made in the U.S. Is almost, it actually is not possible. Unless I want to do a 1 million unit run, which is what they asked me to do. They could tool it up and do a 1 million unit run in the U.S. Otherwise, I couldn't touch it. So all the bottles we have to come from China as well. Same situation. We didn't really have material challenges getting them over here, except for and we had to fly some of them by plane too because the boats were taking too long in some cases. But it really was about identifying the product, how you want to make it, what's important to you from a value perspective, and then identifying there will be a number of people you have in the U.S. who can do it, but then really getting extraordinarily comfortable those manufacturers and how they align with what it is you want to get done. Kind of a apple pie answer, but that's how I thought about it.
Nice. Well, I'm glad you also mentioned the references as well. I know that's huge. What was actually interesting with Chad Rubin, the founder of Think Crucial, he talked about this last week where in a lot of our industries, we look at our competitors, but as true competitors, but the pie is so big. And he's like, it hasn't always been cordial, but we've kept our competitors close and spoken to them often. And some of them were having some supply chain issues during coronavirus, and we were having some different supply chain issues or manufacturing during coronavirus. And we're able to swap contacts and able to manufacture products that we wouldn't have been able to by getting references or introductions from some of our competitors as well. And so kind of different thinking, but during times like this, you need to be rather creative and scrappy. Let's see, another question over here from, hopefully I pronounced this right, Shanak. How have you pushed manufacturers to change their standard contracts? Typically, most suppliers will charge for late payments, et cetera, but what can be reasonably included in the contract in the event that they delay supply? And has anybody been successful with this?
It's been a gentleman's agreement for us. I mean, we haven't had to put anything in our contract. our job is to sell as much as humanly possible, keep coming with bigger and bigger orders, and they accommodate in every way they can. They want you to succeed. And so if you give them the ingredients for them to make more money, more orders, more utilization every single day in their factory, they're going to go to the ends of the earth to make sure you don't go out of business or make sure you survive, because it's in their interest for you to succeed. But if you're just selling a few products here and there and you're not really going anywhere, they're not going to have any motivation to help you. They're not bad people, but they run a business and they have different priorities. And so as long as your priorities align, then you'll be fine. And anything.
Yeah, I would really not focus on the contract, especially if you're a small company. The money you're going to spend to litigate anything is not ever going to be worth it. Mm-hmm. So it comes down to you've really got to be. You've got to turn this into a partnership. I can't overemphasize it. And that some folks are very transactional. That's the way it's going to be. Like our one of our suppliers is very transactional. Don't care, it's fine. But like our main supplier, I can call the CEO, even though we're not a huge. I mean, we're big, but not massive for them at all. They have 10x, 20x size customers of us. But the CEO will still pick up the phone, will still talk to me. We had a slight challenge, one of our early runs. That CEO the entire Six Sigma task force on it for like 2 broken bottles and was just deadly serious about it. So it just comes down to, I think, as you said, so right, Sam, like get that partnership set up. Otherwise, it's the wrong guy or wrong gal.
Yeah.
I like it. Again, partnerships coming up again, and also just aligning your interests and incentives as well. So here's a question from Mark, and then also maybe Mark Fontanetta from Backblade. You'd have a good answer here as well. I know you're in the audience, but Sam, maybe with your pre-sales, some good info here. So here's from Mark. I've been fortunate enough to sell $40,000 worth of books in a Kickstarter and have almost 1,000 people join the platform in 48 hours. I'm excited, but freaking out.
Awesome.
Congrats. That's a good thing to freak out about. I'm not an ops machine. How can I work out who I need help from and deal with my issues and seeking help? And so, Mark, we actually hear about this a lot from customers coming to us for help, where you just need to scale up quickly. And then while you also get your maybe direct-to-consumer site up and running. So feel free to email us, thearmstrong@shipbob.com. But Sam, if you want to talk through that a little bit, how you were able to manage the pre-sales and like this massive influx in demand in something you've never sold before.
Yeah, so the first thing we did was we launched it on the website as a pre-order, and we were very clear with customers that it was going to take 6 weeks to ship. So if you were clicking purchase, you knew when you clicked that it's going to take 6 weeks to get there. We thought maybe it would take 5 weeks, but we added an extra week just in case. And so my advice would be just to be upfront with everybody who's entering into a pre-order exactly what's going to happen. Don't say 3 weeks and then it turns out to be 7 weeks, because you're going to have a lot of influx of angry people who you then have to explain to and then send a personal email out to, and it's not going to work. So always my advice, as it is with investors, honestly, the same with customers, is just to be open and honest. Tell them ahead of time what's going to happen, and don't let there be any surprises. Never let there be any surprises for your customers, because they're giving you their hard-earned money.
Great. And so
I would echo, Casey, your point. I mean, not that this is a paid promotion for ShipBob, but ShipBob really is a great partner. We've had challenges like any other 3PL is going to have. That's the nature of the game. It's a human capital business, and it can be really challenging. You can get frustrated, but they are a partner. Like I would absolutely reach out. That's what ShipBob's business is to take care of the ops. And they've got, of course, the supply chain piece, but also just connections. Both founders are phenomenal people, ex-Googlers and super sharp in space, lots of connections. So I would reach out. Casey's right. Reach out to Casey. Make him do some work.
There we go. I like it. Put me to work. All right, question I have for you, Jon. Especially as a very data-driven growth lead in e-commerce and running this for multiple brands, what are some of the changes that you've seen across different platforms? Let's say Google and Facebook. How has ROI shifted? Have you seen influx, decrease in demand, CPMs change? I know there's a lot in there, but especially from like the data side, anywhere you can get into the weeds with us on just some of the shifts that you've seen.
Yeah, sure. It's an excellent question. Really unprecedented time for a lot of these paid channels. It's, for those that have logged any mileage in the digital marketing realm, I'm sure can recall that, looking at the year-over-year climbs and CPMs and the different channels as they become more mature and more competitive, you have to go and find greener pastures. That's very much where my role is built, is trying to find that next thing. So, much of our brands were built on the back of, thinking back to the 2012 eras of AdWords activity. And so I think a simpler time then, but, I look year over year at kind of some of the effective CPM, CPCs we were paying there then, where we are today. And during the COVID crisis, to be frank, guys, there's been an unprecedented window in discounts for CPMs, at least paid social in specific for us, whereby we have been able to, in certain cases, quadruple our spend pace and double efficiency, for example. And of course, caveat there being, targeting has to be tight, creative has to be tight, offer has to be there. I mean, all the pieces have to fall into place. But
real quick, I don't want to derail you, which I guess is what I'm about to do. But you mentioned you've been able to quadruple spend. Is that because you think there's an increase in demand? So obviously the supply in ads is larger. Is that because your competitors are dropping off, and so you're able to get greater ROI? Like, why have you been able to quadruple spend?
Yeah, great question. So for us, whether through the lens of Facebook, or rather Google and shopping, we'll take that as an example. The competition for some of these reading glasses terms, of course, there's dramatic shift in decrease in competition in some of those top 3 spots that we're competing in. So we were able to kind of occupy that void created and basically capture all that extra impression share, not only from them leaving, but from, again, there not being as much of the brick and mortar activity to pursue reading glasses. That's then increasing that overall activity. So, we've got clear definitions on what a target ROAS might be in any given channel. We were seeing increases in ROAS and efficiency and in impression share, and our effective CPCs were discounted. So you kind of see those 3 levers that were pushing us towards increased spend. And then for paid social, same thing. I'm grading that more through kind of a CAC based lens. But the same principle applies. These, for us, when some of these targeting buckets are pretty broad, in that, if you are, say, 45 plus, you may loosely qualify to be someone that could be prospected to for our products, say for the reading glasses brand. The CPMs, right when this crisis had hit, they were, I'd say a third of what we were paying just before that time a couple weeks prior. So,
that's a massive drop.
Yeah. So like CPCs with my managing a lot of our paid social, it would have been $1.50 to $2 on certain clicks, and they were down to 50 cents for a couple weeks. So we, just for us, as soon as we saw that dynamic shift, mashed the gas, and fortunately, having a performant site and the back end and what we're doing on the fulfillment side and being able to scale up our inventory needs. For us too, back to your all's question on inventory, we're a bit of an oddball in that we kind of, cannibalization was a good thing for us because we do fulfill to brick and mortar retailers as well. So as that was slowing down, we could kind of pull from those coffers and have that fuel what we were doing on the e-com side.
So a couple things. So for those of you who are not spending all day doing marketing like some of us, CPC is cost per click. CPC, right. I guess the English version is like cost per 1,000 impressions.
Yep.
So those are often how people bid, or cost per acquisition, or CPA. So just for those of you out there. A question.
Can I ask a question, Casey, actually, of Jon? Because we are, depending on that, I also run a bunch of different businesses, and like for our probiotics, we're seeing the opposite. Like we're seeing it's really pricey because I think we're in the health space. So like we're not seeing, so everyone out there who's running a business saying, oh my God, I'm not seeing the same decline, don't feel too bad, because I think some of our businesses definitely are that way. Other ones are opposite. I'm curious, are you seeing, what we're seeing, what phenomenon is people adding to cart, but not hitting checkout. We were at like 79% of folks who added to cart would hit checkout pre-COVID. And now sometimes we're in the 25, 26% range. So same site, same cart, same everything, literally just we've gone from 3/4 of folks going from cart to checkout to 1/4 to half, depending on the day. Are you seeing the same thing, or is that just an anomaly for us?
That's a great observation. We did see the same dynamic. So top of funnel, the top of funnel increases have been far more dramatic than what we would see. So yes, there is inherently some dilution in conversion. I will say what we had seen once we noticed that shift was then immediately going through, quickly doing an audit on our remarketing presence and saying, do we need to add any additional kind of restrictive rules if, say, we would have followed you with remarketing banners if you added X number of items to cart? Do we need to increase that threshold? Do we need to decrease the window of time we might follow you? Because to your point, our previous pre-COVID system targeting was saying, these sets of intent signals mean that you're pretty well qualified. And to your point, now all of a sudden that baseline's out the window. And so not that it was a runaway spend scenario, but we had a little bit of an echo chamber in our marketing efficiency that we had to kind of ratchet down on.
Well, I'm glad you also called out ROAS, or return on ad spend, because that's where, even if you're getting cheaper clicks or cheaper impressions, if your conversion rate falls off a cliff, it doesn't matter.
Yep.
Your ROI is going to drop, your revenue is going to drop. And so that's why it's important to look at return on ad spend.
Yep.
And so I have another follow-up there real quick, but here's a good idea from Miguel as well.
Yeah, great point, Miguel. I'm going to do that today. It's a perfect point.
People are wondering, will my order ship? And if you're not answering that question, this is, again, we're being proactive in communication. Maybe it's, yes, it will ship. Yes, it will ship on time. Yes, it will ship if there might be a delay. Yes, we have inventory in stock, because I know that there's a lot of kind of horror stories out there about companies that are selling, but they're not being upfront like Sam was, that, hey, this is pre-order. And so people are ordering it and then they're expecting it within 1, 2, 3, 4 days, and they're not coming. So great idea there.
Yep.
Great idea.
And so one more question, John, on the ad side. So you mentioned, hey, there's 3 levers we look at. So if you even recall saying that. So if you were to, like, especially for those of us out there that want to say, okay, what are like the 3 things that maybe I should look at from my data? Because there's a million things that people can look at.
Sure.
And so if you were to, like, identify or just simplify it to 3 data points, maybe from like return on ad spend or cost per click or something like that, what would those 3 be?
Yeah, I mean, excellent question. So I would imagine with a lot of those that maybe have a Google AdWords presence or competing in Google Shopping, so ROAS presumably is that core success metric. So ensuring you have a good and clear understanding, what is your break-even ROAS and what is a target ROAS that you want to target, and are you willing to, say, sacrifice a little bit of profitability in the pursuit of a more aggressive top-line stance? So that's something we think a ton about, and we will be willing in certain cases to go a little bit more aggressive in sacrificing some of that ROAS to ensure that we maintain a presence in branded search queries. For example, we want to ensure that we don't have competitors stepping on our toes in that domain. So ROAS and having a good, clear understanding of where your break-even point is, that's helpful. For us, with certain channels that are more on a CAC basis, so CAC is cost to acquire a customer, which we're looking at as total spend divided by number of new customers driven. That is, again, it goes back to what is a CAC that we're willing to pay up to acquire that customer relative to their customer lifetime value. So there's a lot of really great content out there for folks that are interested in reading on the notion of a CAC to LTV ratio, or customer lifetime value. Highly, highly recommend Googling this topic. It kind of reset our understanding of how we should be thinking about growth in certain channels. But CAC and a good and clear understanding of what your customer lifetime value is. Even for new businesses, if there's a way that you can start to monitor and track what that repurchase rate is and what those repeat dollars mean in your ecosystem, ultimately a good and strong defensible LTV, particularly for subscription services, that's your bread and butter. Then I think the last one, this is kind of a weird curveball, but for me in the growth position, we're always thinking about how do we make these dollars punch the hardest. In terms of optimization and how we're testing different channels, kind of the points of leverage are really targeting is number one, then the offer, and then creative. And a lot of times me and the marketing team, I've seen this over the last 5 years of testing all this stuff. People get really dialed into the creative and maybe a little bit on the offer. And there isn't a really firm level of discipline and a well-defined testing framework on targeting. But I can't stress enough, in terms of leverage, you can have an excellent offer, excellent creative, but if it's falling on the wrong audience, if your targeting is not as tight as it could be, that spend's going to fall on deaf ears.
Well, literally any of those things, right, John? I mean, it could be. It's either the targeting or the creative, or they all have to work as a flywheel. Otherwise, you're blowing money. Spot
on. I mean, I will say though, like thinking back, it's about 3 years ago, we were not doing anything in Facebook, paid social wise. And truthfully, I look back at that creative. The offer was not bad. The creative was garbage because we didn't know what we were doing. But the channel did work. And so that was because the targeting box was checked. So I would say, like in the spirit of being the growthy test guy in our world, I continue to maintain that to the team of like, can we say with a very high level of conviction that targeting is as good as it can be? And if no, are there other channels in our ecosystem that are working well with first party data that we can audit and help inform how we should pivot in these other channels? Like maybe paid social isn't working because we've made some flawed assumption. And is there something we're seeing in our Amazon data, say, to help inform that?
That's a great call out. And it's not always the channel's fault. It could be the execution, even though we all want to the channel. And also, it's not always the right time for the channel. And so these channels evolve as well. Like Facebook is much different than it used to be. Google continues to roll out new products. They're both trying to innovate as quickly as they can to compete with each other, just like Amazon as well. And so you should pick a horse or a couple, and by that I mean channels, so that you're not spreading your time all over the place. But again, the channels and your products do evolve as well.
Yeah.
Okay, so we have, somehow we're already 54 minutes past the hour. I'm going to try to get a couple more questions, then I have one final question for the group, which is very fast. So Saeed, you asked a question about Google and Facebook. I think we dove into that quite a bit. Zaka, you asked a couple times how to become a carrier for your platform. You do local deliveries. Email me, carmstrong@shipbob.com. From Vinayak, you plan to ship 70% alcohol wipes. Are there specific approvals? Can ShipBob help? Yes, we can do 70% less. Again, carmstrong@shipbob.com. And why ShipBob over FBA from Zach? Actually, Mark last week had a great answer to that. So again, Zach, email me, please, carmstrong@shipbob.com. I'll just send you or there were a couple others that had some good ones. And then last one, we'll end with Mark here. So if any of you have a subscription model, which program are you using to manage it?
We do, and we're on Shopify. So we really have two options in Shopify. It's Bold or Recharge. So we use Recharge.
Okay. Cool. Well, on that note, my final question. So Stefan, John, Sam, we'll go in that order. If you have one piece of advice for brands trying to navigate through these times, or not, maybe not just survive but thrive, what would that piece of advice be?
Wow, sorry, I was looking at Nick. You spelled Casey's email wrong, so you got it. Okay, I was distracted by the typo.
Good catch. I was too.
I can multitask, baby. First, always be branding. That's the first thing. That's how you survive, right? Always be selling. I think for us, we had to step back and take a hard check. And I worked with my board and my investors, and I just said, folks, like, this is not the time to. I mean, we want to profit, obviously, and keep our employees employed, keep everyone going, keep ShipBob busy, and everything else. But really, I think as Sam has said so well, so many times, the authenticity that we have with our customers, the fact that we talk about the fact that, hey, I'm scared sometimes. We put that on our mails. It's like, it's okay. And here's how you overcome that. Here's some mental health resources. And here's how we're supporting frontline workers and doing it really like we're with you. Like, we're not some company that's looking to take your cash. Like, we're part of this society. We're part of this solution to get past this problem, I think, and I hope. And we're just going to kind of lay it all out bare. And that's what we've been doing, since we started. And people, our email open rates, for example, which I send one every Friday that I actually do store right. And it's, 35 or 40% open rates. And it's because people are really, they trust us which we've earned, and they want to kind of support that. And so I just can't and then Sam did a nice job, and I think John, you did too, just really just kind of focusing on authenticity, which I know is overused, and transparency, which is overused, but we're just really trying to be with everybody else right now versus being, a merchant. That's not the best answer in the world, but that's how we're approaching it.
Yeah, I mean, I completely agree. I would say for us, our customer support team, which we call our customer happiness team, that is really, at the end of the day, where our customers know our brand the best. It can be a high touch engagement. So whether through phone, email, chat, you name it, that messaging is, those macros and messaging is woven into all those touch points, and we're actually encouraging it. Presumably that's a higher touch and there's more operational overhead in supporting that dialogue, but for us, it's completely justified, and we believe that the loyalty of those customers comes first and foremost. So we have a constant probe out on, in terms of any sort of qualitative NPS feedback we're getting, product reviews, any of the feedback we're getting through paid social, we're mining as well. So we're trying to use those as a leading indicator to understand, is there misses in messaging, back to the question on, do we need to be doing more than just a site-wide banner saying, hey, we're still shipping, but we know the COVID thing is hard. We're letting our customers help us answer that question, and then reacting quickly to let the marketing team serve that gap.
That's great. Sam?
So we actually debated a lot internally. And when I say internally, we're 3 people at BlackWolf. But we debated between the 3 of us significantly whether to lean into COVID in terms of messaging or whether to not. And we ultimately leaned on the side of not, aside from the hand sanitizer. And that was just because we thought our customers had heard enough about coronavirus from everyone else. Didn't need to hear it from us yet again. We want to be, if anything, a distraction from it. And like when you use our products, or when you engage with us, or when you talk to us, we want to be a distraction. And so if customers have reached out and said, I got laid off from my job, can I cancel my order? Sometimes we'll just send it anyways for free. Like little things when you personally reach out to us. But overall, we have tried to basically continue operations as normal. And the advice I give anyone in this time is the advice I give anyone at any time, which is react to the environment that you're in. The environment's always changing, even if it's a huge shift like it is now. Talk to your customers in a way that shows you respect them and can address their needs, and sell a product that people really want. And if because of this situation, your product people don't want your product anymore, like if you're in the movie business or something else, try to pivot to another product similar that people will want. We did that with the hand sanitizer. Now the hand sanitizer is still about 1% of our sales right now. We don't have enough supply for it to be an appreciable amount. But people still are at home, and they need body wash, they need face wash, they need to look great. And so, it's like I always say, when you come out of quarantine, if you have horrible skin, it's not going to be fun for anybody. So it's all good, right?
That's awesome.
And one of our investors is in the beauty space, and they said that they saw a huge drop in makeup, but a massive increase in skincare and hair care. And so they leaned into it. And it's all about adapting to the current market, and I think that's always going to be the case.
That's awesome. Thank you, Sam. This is great. And so final things, John. Yes, glad you called out the Lightspeed article I posted in the chat. Lightspeed Venture Partners, one of the leading e-commerce and direct-to-consumer venture or VC firms out there. Highly recommend checking that out. There's some good links from that if you guys want to dig into CAC and CPA and all the other fun acronyms out there. Really, thank you all for joining us. Stefan, John, Sam, this was great. Nick, thank you for putting this on. Nick, you want to show off your Bob sweater? Here we go. He's got the Bob sweater. Next week, we're coming back every Wednesday at around 3 o'clock Eastern time. We've got Tom Brady's brand with TB12 next week. I'll have some sweet TB12 swag for that one. But again, thank you all for coming. If you have questions, send me an email. We can connect you with the host as well if they give or the guests as well. So thank you very much.
Thanks, guys.
Thanks, guys. Have a good one.
Cheers.